Welcome to today's market report. European stock markets edged lower on Tuesday, consolidating after recent gains, although the energy sector outperformed, helped by positive news from oil giant Total. The DAX in Germany traded 0.5% lower, CAC 40 fell 0.1%, FTSE 100 dropped 0.1%. Total stock rose 2% after the French oil major surprised the market by reporting better than expected fourth quarter earnings, bucking the trend of weakness in the final quarter of 2020 on the back of renewed lockdowns to combat the surge in coronavirus cases. The company said its earnings recovered in the fourth quarter as the oil prices stabilized, although a hit from write-downs on assets due to the pandemic plunged it to a $7.2 billion net loss for 2020 as a whole. Global stock markets have climbed strongly in the last few months, helped by optimism of future economic growth as governments and central banks continue massive spending and many easing policies, while vaccination programs point to the end of the coronavirus pandemic. The major European indices have generally seen less impressive gains, although the German DAX did reach an all-time high on Monday, with the continent hit hard by the second surge of the virus and the European Union's vaccination drive falling far behind its US and UK equivalents. In other corporate news, Demant stock soared 13% after the Danish hearing aid producer easily beat expectations for the second half of the 2020. Ocado stock dropped 1.9%, despite the company reporting its online sales jumped 35% in 2020. That said, the company as a whole, including its tech business, reported a small loss over the year. Oil prices continued to push higher on Tuesday, reaching their highest levels in 13 months on growing optimism of the recovery of fuel demand, coupled with supply curbs by the top crude producers, primarily Saudi Arabia. Crude futures traded 0.3% higher at $58.14 per barrel. Brent contract rose 0.2% to $60.80 per barrel. Both contracts are at their highest since January 2020 and have posted gains for the seventh consecutive session on Tuesday, the longest winning streak since January 2019. Gold futures rose 0.7% to $1,846.75 per ounce. On the FX front, the GBP-USD pair maintained its bit tone through the early European session and now seems to have entered a bullish consolidation phase near multi-year tops around 137.75 region. The pair built on the previous day's optimistic intraday bounce from the 136.80 region and gained some strong follow-through traction on Tuesday. The momentum pushed the GBP-USD pair further beyond 137.55 to 137.60 region and was sponsored by the emergence of some fresh selling around the US dollar. The US dollar bulls turned cautious amid doubts about a relatively faster US economic recovery following the release of rather unimpressive US jobs report on Friday. This, along with the modest pullback in the US Treasury bond yields, weighed on the greenback and provided a modest lift to the GBP-USD pair. Meanwhile, the progress in coronavirus vaccinations and developments to fast-track the proposed stimulus package remained supportive of the underlying bullish sentiment. This was seen as another factor that further undermined the US dollar's safe haven demand. With Tuesday's positive move, the GBP-USD pair already seems to have confirmed a near-term bullish breakout and seems poised to extend the positive momentum. A sustained move beyond the 138 mark will reaffirm the consecutive setup and pave the way for a further near-term appreciating move. The European currency regains the smile and pushed Eurodollar closer to the key 121 mark on turnaround on Tuesday. Eurodollar quickly leaves behind Monday's small downtick and resumes the recovery from last week's yearly lows in the mid-119s. The key 121 mark has now become the next target of relevance. The resumption of the upside momentum in Eurodollar comes amidst renewed weakness surrounding the buck, the corrective downside in US yields, and the generalized bias towards the risk complex. The German trade surplus improved to 16.1 billion euros during December. The ECB chief Lagarde on Monday reiterated the ultra-accommodative stance from the ECB amidst the persistent lack of upside traction of the inflation in the region. The Eurodollar pair is gaining 0.41% at 120.94, and a break above 121.24 would target 121.73 en route to 121.89. The dollar index was down 0.3% at 90.638, continuing the weakness seen after Friday's disappointing job data, bringing an end to its 2-month high of 91.6. This is today's market news. Thanks for listening. We'll see you next time.